Hi everyone, this is Matthew Cruz, and I'll be sharing with you the May USDA supply demand report that came out this AM. Give you a quick look at our disclaimer here. Futures trading does involve some risk. I want to start out, we'll look at old crop here. The big news was in the new crop that the USDA lowered yield projections for this 2022-23 crop season. We'll get into that, but look, just taking a quick look here at old crop, was pretty much everything was left mostly unchanged in the corn. You could see the last month was at 1.44 billion bushels, and they left that there. It was a little bit higher though than what the trade was looking for, and so maybe slightly negative report then in July corn. Then you kind of see the not much movement to the upside in the corn market today because of that. And soybeans came in at 235, pretty close to what the estimate was looking for, and down from last month's at 260. Fairly good news in the wheat, came in at 655. The estimate was at looking at 684, so actually came in about 30 million bushels below what the average trade was looking for. And last month we were at 678. So looking at next season already, we get our first look at what the USDA is looking at for next season. They starting out in the corn, they came in at 1.36. Last year, we just showed you that we were at 1.44, and so what this tells you is that, and also looking at the beans, we're at 310 compared to 235. So it's a little bit higher than where we're at this year. But what this tells us is that stocks are going to be pretty tight, and at least in the case of what we're looking at here in corn, they're going to get even tighter. And so despite a new crop, and so looking at wheat, 619 compared to 655. So you can see the wheat market was up today, as was new crop corn at the moment. So the reason for that is that the USDA reduced their projected yield for this season. They're at 181, which would have been a record, and they lowered that to 177, which matches what we were at last year. They left the acres unchanged, and so that's why we get this production at 14.4 billion bushels, down from 15. So we're actually going to estimate it to produce less overall this current crop that we're trying to put into the ground. And so I think that's an obvious reflection of what we're seeing with delayed planting and cold weather and wet areas in the Dakotas and in the Eastern Corn Belt. Looking at the soybeans, they left that unchanged actually in the soybean yield at 51.5. 51.4 last year, 51.5 for the yield, and the production at 4.65 billion bushels. So fairly close to what the average trade was looking for. Looking at global production, Brazil soybeans, they left that unchanged, 125 million metric tons. I was a little surprised by that. I would have thought they would have lowered that a little bit more. Corn, they also left that unchanged, 116 from last month as well. So it's it is going to be a bigger crop, but I still think there's a chance they'll shave some more off of that yet. In the case of the soybeans, they did in Argentina, they shaved off 1.5 million metric tons from 43.5 down to 42. In the corn, they left that unchanged at 53 from last month at 53 for this month in Argentinian corn production. Taking a quick look at global ending stocks, corn is at 309.4. So that was actually on the high side of what they were looking for. So I think that's fairly negative, at least on the global projection for ending stocks. Last month came in at 305.45, and the soybeans at 85.2. So that was positive. The average range was at 88.8. Last month we were at 89.6, and so that headed in the right direction in the case of soybeans. Yeah, and that's, I think, a reflection of partly what we're seeing in the loss of production in Brazil and in Argentina. Looking at the wheat, came in pretty much right on target. We're looking for average trade was at 279, and we came in at 279.7. And so not much change from last month's at 278.4. Of course, China has a big impact on our exports, and we can take a look here that they've been buying a lot more corn lately, or maybe not quite as much as last year, that 29.5, but a couple years ago it was only like 7. And so they're still projected to buy over 3 times as much corn as what they're buying just a few years ago. And in soybeans, 92, so they're fairly on track for what their expectations are this year, although it's still slightly down from last year. That could be partly just because a lot of the COVID lockdowns, that they think consumption is going to drop off because Shanghai is still, for the most part, in lockdown. So I did a side-by-side comparison of May old crop, 22 crop, compared to May projections for 23 crop to kind of give a better idea of what we're looking at from one year to the next. So you kind of see planted acres at 93.4 and projected at 89.5. So we're going to shave off about 4 million acres. We're going to plant 4 million acres less. The big news, as we talked about, was the yield projections. Last year's crop was at 177. They had projected 181 earlier this year in February, and then they just reduced that now. So that's a big deal. They shaved off 4 bushels per acre. And again, that's a reflection of what we're seeing with the delayed planting and most likely increase of prevented planted acres and a lot of the Dakotas and a lot of the wet spots in, I think, the Eastern Corn Belt as well. So you can kind of see what that does to the production. Production will be a lot lower, about 600 million bushels lower because of that lower yield and lower acres. And looking at these are all projections, of course, so these can continue to change. They kept ethanol the same. They did reduce feed usage by 300 million bushels, nearly 300 million bushels. But ultimately, that brings our ending stocks down to this 1.36 billion bushels. And so, stocks continue to get tighter. And we still haven't got the crop in the ground. So there's nothing to say that yield projections can't continue to move lower yet. So I think it was a couple of years ago, we yielded 167. So, if that happens, we could see this number still fall below 1 billion bushels. Looking at soybeans, again, this is comparing old crop versus new crop. So last year we planted 87.2 versus a projected 91. And of course, there's a lot of debate about, are we going to see a shift from corn to more soybeans as some of the planted areas are going in late. And so there's been a lot of debate about that. Looking at yields pretty much left unchanged, just 1/10 of a bushel, so not too much change there. So a modest boost to production, but still looking at our ending stocks from 235 to 310. 310 is still pretty low, and I was not as low as 200, but just a few years ago we were at almost 1 billion bushels, and so we're looking at still pretty tight stocks, and it wouldn't take much impact from weather or lower yield to drop that lower yet. Wheat continues to get some good news despite adding, they add about 700,000 acres in wheat, and a little bit better improvement to yield, adding 2 bushels more per acre. Just with increased, some of the increased exports and usage, they're still going to end up with ending stocks lower down to the 619 million bushels compared to 655. So, for wheat, it's very unusual that way all 3 crops, are getting pretty tight and getting tighter as time goes on. And so it's going to take us a while, like we've been saying, it's going to take us a while to kind of produce our way out of this. And so, we've been arguing to buy the dips as any weakness in market prices, we consider to be fairly temporary. And so, all this did today was reinforce that, we think that prices will continue to stay strong. Taking a quick look at corn, this is the December new crop corn price. You can see this is not the close, but this moment we're up 9. We did bounce off pretty close to our highs here. We're just about 758, 757 is our high. And so we bounced off that. So obviously, to keep that forward momentum going, we want to trade back above these levels. But we're still up 9 for the day, so we'll have to see how we close. But you can see here that we gave up about 50 cents, and which maybe seems like a lot, but we would point out that the trend is still intact. We've been up a couple dollars or more in the last since the start of this year, and so 50 cents really isn't all that much. And so we're seeing a lot more volatility, and so that type of swing is going to be more normal, unfortunately. And so, but again, we want to move back above the 758 level in new crop corn to continue that upward momentum. Looking at soybeans, they were up 4 at this moment. This is not the close. This is new crop soybeans, but it's kind of similar situation with they've sold off a little bit here, but kind of looking for more direction from the report today. But again, our next level resistance here, pretty strong resistance, is about this 1535 to 1540 level right in there. And so I guess I would expect to see soybeans eventually move back to this level, as time goes on, especially if there's any more planting delays. But looking at in the wheat, wheat had looks like the best day. It's been up 27 cents right now. This is not the close again, but we can see we made a new high in the new crop wheat here, and so they've had a very good day. And again, it's just based off the fact that despite increasing acres slightly and a little bit better yield, we're still going to end up with depleted ending stocks, slightly less than where we're at right now. And so, and a lot of that's just based off of what we're seeing as well, of course, in Russia and the Ukraine, that they're unable to get the exports back to normal. They're exporting a little bit out through Romania, some of the bordering countries in Eastern Europe, but it's 10% of what the normal was. And so it's going to disrupt things for a long time. And, there's no quick fix there. So kind of sum things up. Again, if you're a bull, you're going to point to the continued tension in Russia and Ukraine. Of course, the delayed planting. However, I think you are going to see planting really start to pick up now in next Monday's report. I think a lot of guys have gotten a little bit more done this week and this weekend. It looks like they've got some better weather. However, in the Dakotas, it depends which region you're at. In the Dakotas, they probably haven't got much of anything done. It might not get much done, yet in the month of May. And so that's more than likely going to lead to an increase of prevent planted acres in a lot of these areas. And again, I'll point out that we're at peak acres. There's really not much more that we can do. If we increase corn, we got to decrease soybeans and vice versa. And so if you're a bear, you're going to point out that the war, can't go on forever, that eventually it's going to reach some sort of conclusion. And that will then subsequently put the export market back online for a lot of these, a lot of the wheat and corn that's being held up in the Ukraine. Russia is able to export some more wheat, so they've been kind of, there's been reports that they're stealing Ukrainian wheat and then exporting it out themselves or consuming it themselves, and so the Russia can still continue to export that wheat. So it's not as if it's completely stopped altogether. Brazil corn is going to have a better year this year than last year. Looks like they did increase their corn production acres, although I think their yield is going to be down a little bit. You can point out that with these high prices that it could continue to lead to some sort of demand destruction or rationing of production. If you have any questions, feel free to give us a call, 712-227-1110. Thank you and have a nice day.